All right, when you get into the financial markets, there are really two main paths to making a profit. You can be an investor or you can be a speculator. Now, they might share the same goal, to make money, but believe me, their journeys could not be more different. So let's break it down.
And that brings us to the big question, the one you should be asking yourself. Are you an investor or a speculator? Hey, you might not have the answer right this second, and that's totally fine. But stick with me, and by the end of this, you'll know exactly where you fit in.
So just at a quick glance, here's the difference. Investing, that's the long game, right? It's built on a foundation of research, and the goal is steady, consistent growth. Speculating, on the other hand, is all about the short term. It actually embraces volatility and is all about making those high-risk bets. Think of it like a marathon versus a 100-meter dash.
So let's really dig into these two paths to profit, because we need to understand the core difference that separates these two philosophies. Because look, at the end of the day, everybody's trying to do the same thing: put money into the market and watch it grow. The fundamental distinction, the thing that changes everything, lies in how they go about doing it.
Okay, first up, let's take a walk down the path of the investor. I want you to think of this as the road of steady, deliberate, and patient growth.
So what exactly is investing? Well, it's committing your capital with a reasonable expectation of making a profit. This isn't just a random guess or a shot in the dark. It's a calculated move. It's based on analysis, it's built for the long term, and it generally involves taking on average or even below average risk.
And when we say long term, what does that actually mean? Well, the IRS gives us a pretty handy benchmark. For a holding to be officially considered long term, you have to own that asset for at least 1 year. So that's kind of the minimum time frame we're talking about here.
This right here, this is the investor's DNA. This is how they think. So they're not just buying a stock ticker. They believe they're buying a piece of an actual business. They're focused on its underlying value, and they use deep analysis to make their decisions. And crucially, they manage risk by diversifying. You know the old saying, don't put all your eggs in one basket? That is the investor's mantra.
To make this super clear, just picture a huge, stable, multinational company.
You know, the kind with a long, proven track record of paying out consistent dividends and keeping business risks low. For an investor, it's not about finding a winning lottery ticket. It's about finding a reliable engine that can power long-term growth. All right, now let's switch gears and head down that other path, the much faster, much riskier world of the speculator. Yeah, welcome to the land of high-stakes bets.
So what's speculating? It's putting your money into ventures where there's a really high probability of failure. The goal isn't just a good return, it's an abnormally high return. And this whole approach leans heavily on catching those short-term market swings, and sometimes it's really just based on a hunch.
And the timeline? Well, it's the complete mirror image of the investor. We are talking less than a year, and honestly, often much, much shorter than that. We could be talking a few weeks, a single day, or sometimes even just a few minutes.
So the speculator's mindset is all about speed and seizing opportunities. They actively seek out volatility. They're using short-term trading tactics to jump in and out of positions super quickly, all in the hopes of catching a rapid price movement. They aren't just comfortable with high risk, they embrace it. It's a necessary part of the game for them.
So for a good contrast, let's picture a small, super volatile junior gold mining company.
It has no real track record, just a piece of land and a whole lot of hope. This is the classic binary outcome of speculation. The company could literally strike gold and send its stock to the moon, or it could find nothing and go completely bankrupt. It's your classic high-risk, high-reward scenario.
But here's the thing, when speculation becomes widespread, it can have major consequences for everyone. This quote really nails it. When you get these inflated expectations across a whole sector, trading volume just explodes, and eventually you can end up with a massive bubble. The dot-com crash back in the early 2000s is a powerful, very real lesson in what happens when speculation gets out of hand.
So, if these are two completely different paths, it makes sense that you'd need different gear for the journey, right? So let's open up the financial toolbox and see what investors and speculators are working with. Okay, this table lays it all out beautifully, side by side. The investor's goal, steady, long-term appreciation. The speculators, fast, abnormally high returns. The time horizon, we're talking years versus months or less. For strategy, it's buy and hold versus short-term trading. And the tools they use are different too. Investors usually stick to stocks, bonds, and funds. Speculators often dive into more complex derivatives like options and futures. And here's the kicker, the part a lot of people forget. taxes. You get a much more favorable tax rate on long-term capital gains than you do on short-term gains. That's a huge deal.
So now that we've walked both paths and we've inspected both toolkits, it's time to turn that question back to you. What is your financial DNA?
Let's just boil this all down to its absolute core. The investor is obsessed with an asset's fundamental value. They're asking, what is this company actually worth and what's its future potential? The speculator, on the other hand, is obsessed with price movement. They're asking, where is the price going next and how can I profit from that short-term shift?
And that really just leaves us with one final question, a metaphor that perfectly captures this whole choice. Are you here to plant an orchard, patiently cultivating it over many years to produce a steady, reliable harvest? Or are you hunting for buried treasure, seeking that one massive, instant payout, but with the very real risk of coming home completely empty-handed? The answer to that question really defines your path.